Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials down 277, NASDAQ off 81, S&P's off 31, gold contract down $3, trading at $1,128 an ounce. Silver down a penny at $17.11 an ounce. Platinum down $4 at $1,242 an ounce. Copper down 3 pennies at $2.91 a pound. Light sweet crude down $2.85 at $60.97 a barrel. That crude's going to $55, folks. Pretty amazing. Now, King Dollar. No, not King Dollar. It can be King, though. It's King 10-year bonds and 30-year bonds. They're going with conviction. Once again, you get the 10-year up 17 ticks at 127.04. That's going after the highs of October 15th. The 30-year up a full point at 144.02. Bottom line, that's the high is 146. We're going to be there in a heartbeat. King Dollar. King Dollar down 370 ticks, trading out at 88.57. The euro is up 56 at 124, and the yen is down 1.59 at 118.11. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You get deviance in a great way here, folks. And this is what it is. So, yesterday, you get down to a price point of 2034. Comes all the way back, closes out at 2059. But we knew what we had, right? You had high volume, break and swing points, all of the above. Typical bear market action. Typical, what you had out here yesterday, folks, is an aspect that markets just love to do, meaning that you get into a low, it has high volume, a couple of the indices snap back, bottom line comes right back down. Now, we're back down again with higher volume. So the SPX right now at 2038, first stop for the SPX is going to be 2009. So you get another 20 points. We'll see what we can bounce out of that. That's the short term. What the market's going to gun for right now is October 15th swing lows. That thing has been screaming that it wants to get tested. It's a high volume swing low. As we go through some of these indices, you'll see some of the indices have not only just got to them, they've already broken them. So that's 1874 to 1820. It's a big number. Dow Industrials. We go over to the Dow Industrials. We take a look at the Dow Industrials. What we have at the Dow is this. Dow Industrials down 251. More than likely we'll be down about 300 into the close. It's a good even number. Why not take it? But I suspect we're going to be down 300 by the close, actually. Dow Industrials, that thing will be a straight line move down to 17,350. Right now, you're at 17,548. And we'll see what kind of bouncing you can come off of that level. Excuse me, folks. NASDAQ Composite, same setup in the Composite. Composite is going into the lows of yesterday. $75 right now. We're down at 4691, and the Composite, the first rundown will be 4610, and the Composite. Gold contract. What you have with gold is this: gold refuses to back off with the bond market. Both refuse to back off. Bottom line, gold is building cause. We're at 1228. That's building cause to get into 1256, and what I expect you're actually going to see on this move is probably 1347. The bonds. Okay, so ever-ready bond market. This little baby is pretty amazing. We've done 1.1 million contracts today on the 10-year. We are at 127.04. 126.21 is the bottom of the spike high October 15th. That 129 is coming at us. So it's 129.28. That's the next move that we're going to see. The 30-year is already taken out the smaller swing. It took it out yesterday. Had the juice when it was taking it out. 30-year is deep into that bar right now. Right? That's building a base. If you run 5 miles straight, guess what happens at the end? Bang. Okay? You're wiped out of energy. That's what King Dollar did. King Dollar went up 7 months in a row, went from a low of 78.93 right up to the swing points. What that says, King Dollar needs a break. We're at 88.29. A close under the 88.51 this week. Basically, will set up, number one, a pullback to probably somewhere around 84.50. Now, that's a normal pullback. And all we're bringing you with that pullback, folks, is where it broke above the last swing points. It very well could just come right down the other side. So we'll see where that shakes out. What that will do, though, is keep continued pressure on the selling in the S&P, and will put continued juice into the gold market. Now, oil. The correlation here in oil is pretty intense. Why? Because we have King Dollar going down, oil going down. Oil's in a monster ABC structure on the way down. The oil today, folks, has done 407,000 contracts. And bottom line, $55 is coming at you on this baby. If we actually go look at the continuous contract with oil, let's bring this up and see how this baby shakes out. So the continuous contract in oil right now is, yeah, $55 is the first spot. Now, what $55 is the high of the low of 2008. When we get into $55, the exact number, folks, is $54.62. Let's picture, first off, that we get down there. If we are into that number by about $4, guess what? That's going to $32 oil, which will absolutely blow people's minds, but that's where that's going to go. And that 2008 lows, they're game. They're game in spades. One of the targets wanted to look at the GDX. The GDX, folks, is the gold miners ETF structure, and it's the gold miners ARCA index. That's what this is. And inside that index, you've got Gold Corp, Barrick, Newmont, Franco-Nevada, Silver Wheaton, Randgold, Newcrest, Eldorado, Agnico Eagle, and Royal Gold. 25% of it equals Gold Corp and Barrick. We take a look at the GDX, and the GDX is going to need more strength. I like what it did yesterday. It's pulling back with light volume today. It has to build some cause to get the higher price. In general, I don't like the GDX, period. The reason being is that, I've said this a million times, okay, it has Newmont and Barrick in it, and they're both dogs. That's the bottom line. 877-927-6648. Big Blue, IBM, folks. IBM is going to be the shocker inside the Dow. What do you have here is this. Now, it's only down $2.70 right now. We're at 160.29, but guess what we're going to have at the close out here? You're going to have a close, more than likely, right at the 160.05. That has been the low that has been generated. Big Blue looks like it's going to jump the creek. Yeah, Big Blue wants about another $30 lower. $30 lower, and Big Blue is going to put a hammer on that Dow Industrials. Our phone number is 877-927-6648. We get the Dow down at 239, NASDAQ off 71, S&P's off 26. We're going to be right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rose, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now down 229. You get the NASDAQ off 66. S&Ps are off 25. Excuse me, folks. If we go over to the XLE, okay, so we know, oil's been getting smoked in an extraordinary way. XLE, same setup of the XLE. XLE not only has broke the October 15th swing low. That was $77. We're at $75.40 right now. And just, this is down from $101, folks. And, we'll see whether the selling is slowing down. But when we certainly look at the equities that are inside that baby, they want to go lower. ExxonMobil's the largest weighting structure inside there. That's down 261. That is traded at 88.76. The swing low on that is 86.91. And I expect we're going to test it in the next few days. The second largest weighting, however, is Chevron. Chevron blew away that swing point a few days ago. Chevron is at 104.38, and that number was 106. And Chevron is off that high from 135 to 104. What you do have, what is happening out here now, so let's go to the financial sector next. So inside the financial sector, the XLF, it's not huge today, okay? It's down 24 cents, no big deal. My take is that this thing has hit a high, okay? We'll see how we come off it with volume. We go to J.P. Morgan Chase, JPM, what's happening with J.P. Morgan. That's coming down on volume. That has to do with the number of trades that they come out with and said they're going to be shy, about 17% in the trading structure out here today. We're at 60.72. What that does, that sets up now that it's going to go after its swing low also. It always wanted to go after the swing low because this October 15th swing low, folks, is huge. So it sets up that it wants to go after it. The real key is going to be, does it go after it and break it? What you do have happening inside the banking structure, and it's not all the banks, but what it is that there's many banks that have big exposure to the energy market. Huge exposure, okay? PNC happens to be one of them. And bottom line, it's a regional bank. You know, we'll see how it basically handles this. But the bottom line is that there was an article out there today that they think that the exposure there is about $10 billion. Now, does that matter? That matters dramatically, and this is why, folks. Okay, so watch the correlation. The correlation is pretty sick, meaning that the way that the oil structure has come down. You know, I heard a couple CEOs out there this morning talking about that, well, no, it's not that bad. You know, we take a 5 to 10 year look because we've been in this for a long time. Now, that is certainly the way to look at any business you're in, folks. But what happens and has happened in the oil business, and it's happened many times, is this is an out-and-out crash. This is not... If the oil prices had come down over the course of a year and a half, you know, 45%, that would be one thing. The oil prices, folks, okay, basically collapsed. And just to give you an idea what it would be like, okay, I'm going to bring out oil up just so you can see the correlation, because this correlation will stick with equity traders a lot easier than just saying numbers. So oil was trading at 105 in July. Okay, so August, September, October, November, December. Okay, so we're not 4 months. In 4 months. So picture this. In 4 months, picture that the Dow Industrials came down 7,000 points. Okay, that's because that's what oil has done. That's what it comes down to. Okay, that's a crash. Okay, so now let's get back to the banks. So the correlation here goes, and you've heard this a million times, you know, who has clothes on when the tide goes out and who doesn't? Well, a lot of the regional banks have large exposure. You know, we'll see where that shakes out. What you are seeing inside the banking index out here, not necessarily the XLE, because the XLF. You see that the JP Morgan, I don't think, is exposure to the oil market. What you are seeing it, though, is you're seeing it in the regional banks. You know, because particularly in the South and the Southwest. Why? Because of that type of exposure. Because someone's going to be going belly up out here. That's just the way it's going to go. Let's go over to IBM. Well, here, let's inside the indices right now. We'll tell you what's moving in and what's not. Oh, that Boeing's a big one. Check this out. So what's putting juice into it, even though it's down so dramatically, you get Nike is up 78 cents, Merck is up 14, and Pfizer's up 7. Other than that, your other 27 stocks are negative. Home Depot is down 19 cents. Now, these are the big ones. ExxonMobil's down 259. Boeing is down 450. JP Morgan Chase is down 175, and Caterpillar's off 247. If we go over to the NASDAQ composite and we take a look at the composite as to what is moving the composite, bringing it down is that you have... No, I can't do it that way because the composite, it's interesting. The composite, if you do it, I can do the NDX 100. Yeah, I can do the composite, but what happens if you bring the composite up was a penny stock that seems to be the most percentage down. Inside the NDX 100, which is down 56, you got Wynn Resorts is down 991. Oh, I want to go back to that. That's pretty intense. Vipul Communication is down 16 cents. Alexa Pharmaceuticals off 731, and you got Catamaran down 152. Putting juice into it would be Corrig Green Mountain, that's up 678. Staples is up 48 cents. You got Broadcom up 26 cents, and you got Monster Beverage up 40. Now, if we go over to Wynn Associates, Wynn is trading at 146. That has been a straight line move down from 220. We're at 146. This is about as intense as you get. We put this. Oh, man, this is going to be intense. Okay. So if you want to see... Okay, this is not going to stop here either. If you want to see, you know, high prices, no volume, distribution, coming off it with volume, go look at Wynn. Win is on its way right now down to 123. And, we'll see what it does at that particular point. What you do have happening, of course, and that may be the case, with Win, is in China there's a huge crackdown. In fact, if you didn't see this yet, they actually arrested the person that's in charge of all the security. Okay, the guy that was probably the most feared person in China, because once you get arrested in China, you're done. You throw away the key, the whole ball of wax, okay? Bottom line, they arrested him 3 days ago on bribery, okay? So he's done. What that is showing, no doubt, is no one is immune. Now, if we bring that back to Wynn Resorts, you bring that back to Las Vegas, let's go look at LVS. It doesn't have to do with anything with their management. What it has to do with is that the amount of graft that has happened and does happen in China, a lot of it is spent on gambling. And the bottom line is that the gamblers are not showing up in Macau. Why? Because in Macau what's happening is that's where the security apparatus is saying, hey, who's spending all this money here? That's the easiest way to find, where all this money's coming from. Some of the Dow stocks out here, let's take a look at them. You have Marvell is down 28 cents. Boeing's a big one. Let's go take a look at Boeing for a second. Boeing's down with juice. Boeing going after 121 to 116. Right now you're at 125.15. 877-927-6648. Dow Industrials are down 222. Nasdaq's off 65. S&Ps are off 24. You stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. EverBank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials are down 200, NASDAQ off 61, S&Ps are off 23. And as you come over to our website, folks, at TFNN, what you're going to see right in the middle, right in the front of the carousel, a special on the gold report. The next Tuesday is going to be the 660th edition of the gold report. We are doing a special. That special is good for, well, I guess about another 6 days, and that's it. You can get 60 editions of the gold report for only $600. That's a 50% savings. What you also get, which is an $88 value, you get my book, an autographed book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you do have Tiger dollars, you can use them. If you subscribe now, you can take advantage of it. If you happen to want to be in the metal market for the next 60 weeks, you can take advantage of it. We've only done this once before. Bottom line, so you get 60 for $600. Check it out on the front page of TFNN. Market-wise, what we have is this. The volume characteristic out here is that you're going to have another expansion of volume today. I suspect, let's see, we got, I get 35 minutes. So we're going to do about 850 on the NYSE. And we take a look at the NASDAQ. What you're going to have is that the NASDAQ going to come in at about 1.9 to 2 billion shares. The indices themselves, bottom line, have broken. The October swing point, folks, is the big number. And the deviance is behind the move. And specifically what I mean by that is this, is that every bounce, every downdraft that has got bought has been successful, no doubt. Yesterday, guess what? That changed. Let's go to Victor in Paramus, New Jersey. Hey, Victor, what's going on?
Not much. I want to know if you think FCX can go down to $9, and then I have another stock for you to check out, AMDA.
SCX.
So at $1.14. Well, yeah, check out FCX first.
This is
10-year. Yes.
Precision tool, tape measures, electronic gauges, the lowest 12.
No, that's on FCX. FCX.
Oh, FCX. Freeport McMoran.
Because on that point and figure chart, which is pretty accurate lately, it says it's going down to 9. I don't know what the low was in 2009.
Okay, so check this out, folks. FCX is
the low was at 11.
One of the larger gold companies, copper companies, but guess what? They made a huge mistake at, folks. They bought into the oil patch at the highs, okay? And this is what is just shaken FCX to much lower prices. What it has done is that it got into the 2008, the high of 2008. Right now you're into it by 2 points. And what you have here, Victor, is this. The volume
December of 2008,
yeah, the volume's drying up, but guess what? The further you get into it, the higher probability that, yeah, you got the number. The first stop will be this. See, are you watching Tiger TV?
No, I'm going to watch it when I get home.
Okay. So the bar it's into right now, folks, is the bar from October of 08. The top of that bar is 26.95. The bottom's 10. Then it made the bottom, okay? As it made a bottom at $7.45. Now, this was off $62. So it went from $62 to $7.45. When it came off of that, it had a small sign of strength, and that strength came in, and the top of that strength is 20.61. At 20.61, that's what you want to watch first. You know, if it rejects that, then that's going to be the bottom right there. If it gets into $19, guess what? $10 is on the agenda, man.
Yeah. What do you think of these point and figure charts? Are they accurate?
I like them. I like them. This is what they are.
It says it's going to $9.
This is how point and figure works. Okay, Tom Dorsey, I know him very well. He's an expert at point and figure. I used to have him on all the time. This is going back 10, 12 years ago. What happens with point and figure is this: is that they're slow getting in, and they're lagging basically when you're going short. But they are very accurate. It's a good system, man. It's a good system.
Hey,
Okay.
check out this other one. It's AMDA. They had a secondary offering at $1.14, and it's trading at 76 cents now. And it's a real company. They make implants for your necks.
Okay, so they design, manufacture, distribute broad range of spine and joint implants. The low is 55 cents. The high is 9.37.
I just bought some at 60 cents because they had the secondary offering. They closed at $1.14 last week.
Okay, they only take in $6.2 million a quarter. And hey, this ain't bad. Yeah, you know what you got here. Let me pull us back a little. Yeah, even if it's a dead cat bounce, you can make good money. 1 second.
Well, they make silicone implants for your neck. Some cutting technology now they're coming out with and all that. But I don't know. You
can, you know, I'd stay there. I mean, if this makes it, you're at 75 cents. The first stop's going to be 90 cents. If you make it to 90 cents, guess what? You get $1.45 in it, man. And that, you know, that could be a dead cat bounce, but so what, right?
Yeah, it's a real company, though. I did some.
No, it's a real company. I mean, but that's
they
you
burn
know,
a lot of cash. They have a new CEO and all that now.
Well.
And what about Cliff? Can Cliff go down to $3 like the point and figure chart says? CLF.
Cliff can be, Cliff National
Business.
Cliff National Resources. You're at $7.
The dividend.
You're at $7 right now, and it's under 11.
He's gonna be a buy of a lifetime, though. I think when you have a war and you need all this stuff again.
Right now, on the longer it stays under. Interesting. So $7. You get under $7, and yeah, this thing is a $2 stock.
What about the dividend? Will they cut the dividend, you think, eventually, too? Yeah, right?
Right now, that dividend is shaking at 8.55. Yeah, that's going to be, let me see, the February 13th is the next date. Yeah.
Check. They might have paid it during...
That'll be cut before that. That'll be cut before then, man. They're still taking big money. I can see what you're saying. $1.2 billion a quarter, though. Not bad. Cooking, brother.
All right, take care.
Have a great one, man. Have a safe one. Let's go over and take a look at these, the builders, folks, okay? You get Lennar down at 235, but guess what? That's a normal retracement in a market that is going to end up going higher. You're coming into where the strength was. With 7.2 million, you're down with 3.8. You know, we just went from $35 to 48. This can come. It will come all the way back to 41. You know, if you want to be long and strong, and that's all you do in the marketplace, folks, keep your eye on those builders after this correction's over, because what you're going to have. Let me go to Toll Brothers for a second. TOL. Toll's coming down with some interesting volume. Now this gets interesting because Toll Brothers is. Now, watch this. This is interesting how the market knows this. Toll Brothers, folks, okay, their specialty is high-end houses. And what you do have is this. So check this out. I've been thinking a lot about this, actually, because the context of who gets hurt, of course, in big market downdrafts is what? High-end deals. That's what this comes down to. So Toll Brothers is coming down a lot harder than Lennar, which Lennar, I don't know what the exact number would be, but the amount of people that buy a Lennar home, I suspect that maybe 50% of them are not in the stock market. Because what you're going to have here is this, is that the wealth effect, inside the market is huge. There's no two ways about that. That correlation adds up to when you have fast expansions on the way down, what happens? Well, bottom line is that we know exactly what happens. That if they're not selling, it's a problem. Let's go to Lloyd in Texas. Hey, Lloyd, what's going on?
Hey, Tom, how you doing?
I'm doing great, man. How you been?
Great. Just happened to be up in your fair city of Boston last month, and I thought about you.
I like that, man. I bet everyone loved that accent of yours.
Well, yeah, everybody talks like you up there.
You gotta love it. So did you have a good time there?
I sure did. We met some really fine people. Texas seems to think they've got a corner on the market on nice people, but there's a bunch of nice people in New England, too. Yeah,
I'll tell you, I think what you have there, Lloyd, and I can always hear it in your how you speak. It's your spirit, man. It's the same. It's spirits are where it's at, man. Do you know what I mean? It really is. It's pretty.
Right.
That's cool.
Would you take a look at GPL for me? That little baby used to be a rocket. Yesterday, when everything else was so robust, it was kind of puny, and today it's not acting real right. I missed the first part of your program. I wonder if you could rehash a little of that.
I like what's happening with gold. Gold is building cause for higher price, okay? Great Panther, there's no doubt. Great Panther needs some strength. If we take a look at the GPL, this is what you have. This is a silver producer, folks, a good silver producer. The low 65 cents, the highs 149, and as Lloyd just said, bottom line is that this thing can move. When it moves, it really likes to move. Now, we've had a couple, we had one sign of strength off the low of the 5th of November. And, you get a flat market out here today. What does happen with this equity, folks, which we own it, I own it also, where it gets scary is that when it comes into this 65-cent area, it's like, okay, man, are you trying to break down there? Thus far, it's still okay, but we do need to see wide price spread, accelerated volume. It looks to me like, yeah, I want a rejection of lower price out here today. The volume's light, but we want the price to hold. And, I'm expecting this thing is going to make a run up to that 89 cents, up to the 120. Bottom line, it's got to hold right here.
Well, you did have it at 149 at one point.
You stay right there. Come right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Not all gold stocks are the same. This offer is valid for current or new subscribers. All the details are on the front page of TFNN.com. The sale will be over before you know it, so act now and lock in this incredible price by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow right now is down 264, NASDAQ off 82, S&Ps are off 31. We're talking with Lloyd from Texas, and we're talking about Great Panther, GPL. And you were mentioning that the number that I had brought up earlier. And that number, Floyd, still is on, meaning that 149. That the 149 is the swing high from February. What it needs first, of course, is to take out these other numbers. If we take this and we put this on a weekly basis, it's a pretty clean chart. Specifically, what I mean is this, is that your first low that was established in June of 2013, that was established at 65 cents. It had 5.1 million shares traded at the low. It has a beautiful sign of strength, and it goes up to 134. So you did a double. Even the 134 has a high volume swing point. Then what does it do? Comes from 134, goes all the way back to 66 cents. And the test, folks, went like this. The test of the 65 low that was established in June, we did 2.2 million. That was the week of November of 2013 versus 5.1. So you had You have a sign of strength, you have the test, then we had an additional sign of strength. We come back top side again, we go to that 138 area. That has 8.1 million shares in a weekly. You pull back with 2.1. We have an additional one that goes to 149, and that's where the 149 comes with, and that was 9 million shares. So the setup's right. To basically trade all the way back up there. So it's going to be wild watching it, because what we do have is that you have 3 high swing points, folks, all with volume. You have, okay, and then if I go back over here and go to 65 cents, how we tested in November, that test was at 3 million, and you're still testing 5.1. So the bottom line is that is still set up to make a run up to those higher prices. But as we both understand, we need that expansion of price and volume going topside right now. Okay? I must have lost them. Bottom line, that's great Panther, folks. And that is set up, by the way. The setup is there. What's going to get intriguing coming into the close here is to see whether they can get that magic 300 number. And it's so weird in the Dow anyway, folks, okay? Because the Dow is a headline number. That's what the Dow is. When the market continues going up and up and up, bottom line, you get 30 stocks. Big deal. When we take a look at the percentages out here, these percentages are still small in the context of how markets have come down across the world. The Dow is only down 1.5%. The Nasdaq's off 1.7%. Up in Canada, they're down 2.8%. That is going to be, let me go bring up the TSX right now. That's going to be all the oil stock getting toasted and roasted. Well, here you go. If you want to see how about it, this is, I always love, had high volume low, 14,060, right? 13,646 the low. Doesn't bounce, goes all the way up to 15,100. Guess where we are? We're down there. But now, what you can get out of the TSX, this is heavy. Check it out. What you can get out of the TSX, this is coming down with heavier volume into that low. The first low was established with 305 million shares. Yesterday, you come down with 279. Today, we've done 244. That's a lot of volume coming down on it. That's a lot of volume. And one of our tigers are telling me that the Canadian banks are also getting toasted, which totally makes sense, because when I brought up PNC, the Royal Bank of Canada, guess what? It's at that October 15th low also. That swing low was $66.44, 1.3 million shares. Today we've done 942,000. Bottom line is that, the October 15th swing point is game, folks. The larger game, actually, let me bring up the XLE, because let's see these larger integrated oils. If we bring up the XLE, if you remember when the first break came on the S&P, and then it came all the way back, what that had done, it had broke a much larger... Yeah, okay, so the XLE has done this. Okay, so let's check this out. The XLE, folks, has lined up. It's not the end of the world, actually, but it's pretty intense. The XLE is lined up that it's going to go to 54 bucks. Right now, you're at 74, so that would be a 50% haircut from the highs. That's the way that's lined up. And that would also get into halfway into the bar from 2008. You broke with conviction, and it just never came back. Now watch when we put up the SPX, because the break on the S&P was extraordinary. And what ended up happening with that break is that it rejected it, and it went right back inside. Oh, I got to do this again, because watch this. We're gonna approach this. Oh, this is going to be intense. So the first get-go was a failure, which is really unusual, by the way. Okay, when you break down and you break these long-term trend lines, what you do is you normally come back up and test the other side of them, and then that's it. In this case, when the S&P went down to 1820, which is the October 15th low, came right back inside and get back inside the trend again. Well, that trend, just so you can wrap your head around this, and if we get outside of this trend again, which I expect you're going to, A trend break is 2001. That would be it. So you get 28 points underneath that. You break that again, and that not only opens up the 15th, you know. What that opens up is forget it. I mean, you better make sure you get your stops in. That's the bottom line. Because what it does open up, folks, is that it opens up 1,074. You know, I don't think you're not going to go straight down there, and I'm not looking for a crash either. What I am looking for, though, is a severe downdraft. And my take is that this has started. This has started in a big way. Don't forget, folks, if you do want to be in the metal market, in the gold and silver market, we got a great special that's going on right now. The 660th edition of the Gold Report's coming out this Tuesday, following Tuesday. You can get 60 editions for $600. That's 50% off. You also get a copy of my book, The Art of Time in the Trade. It's an $88 value. Check it out on the front page of TFNN. If you have Tiger dollars, you can use Tiger dollars. If you're in the subscription right now, get it. You're going to save a fortune. The bottom line, which is pretty amazing, my take, you know, this dollar's down 445 ticks. Gold's going. You know, market wants to go down. Gold wants to go up. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow Industrials right now are down 263. Nasdaq's off 80. S&Ps are off 31. We're going to be right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Richard Bach. To bring anything into your life, imagine it's already there. Market-wise, let's take a look at it out here. We had the Dow Industrials finish down 268. Nasdaq off 82. S&P's off 31. All with volume on the way down, folks. Bottom line is that this baby wants to not only get down, it wants to run into that October 15th swing low in the S&P, and that's a long way down from where we are. They've already broken that. You get ExxonMobil, you got Chevron, they're down that. You get a lot of different stocks that are already down at those levels. Gold contract trading out at 1,227 an ounce. They can't whack gold. Why? Because dollar's going each and every time the dollar ticks down. Bottom line, market wants to go down. Gold has been holding flat. Gold is building cause, folks, to get up to this 1256 to 1326 area. Silver, same setup in silver. Silver's trading at $17.09. You get platinum at $12.41. Copper is at $2.91. Now, light sweet crude, check it out. Let's go over and take a look at the light sweet crude contract. That is down $2.45 today. And we're going to bring up the continuous contract. So what we have in the oil market is this. Oil has gone straight down from $110 to $61. Just for that correlation, just if you want to wrap your head around this a little, that would be like the Dow Industrials going down 7,000 points, folks. Okay, that's how dramatic and how fast this has been. We're talking about from June to December 10th. Bottom line, straight line moving the way down. That could constitute a crash, I'd say. Now, $55 looks like where it wants to go. Bottom line, though, is that if you get into this $55 level by too much, meaning that as it trades into that level, then it's going to be a huge problem, and this is why. The low of 2008 in oil was $32.40, and that's, you know, we're talking about a quantity. That's like unheard. It doesn't seem possible. Well, we know it's possible now. What we have now is this. The $54.62 in oil, that's the high of the low. If you get into that bar by like 4 or 5, let's see, yeah, if you get into that bar by 4 points, guess what? You're going to $32. Bottom line is that what it's going to do, and it started doing it today, it's going to do some destruction inside some of the smaller banks. That's how this is shaken out. Now, the king of the markets, the bond market. Bond market wants higher price. It has the price spread, has the juice behind it, the volume behind it. The 10 years at 127.03, the 129.28 from the 15th is going to get tested. The 30-year is almost there. The 30-year is pretty amazing, actually. 30-year bond right now, we're at 144, and the high out there is the 146.16. If you want to see the correlation across the world, and, you know, this is what it's all about also. You have an aspect across the world. If we start with the 10-year first, this is what you have. Our yield in the 10-year is 2.1 right now. 2.1, folks, is wicked expensive. In France, it's 0.96. It's like, really? You're going to give money to France at 0.96, and we have to pay 2.16? That's over 100% difference. Germany is 0.68. Italy, which is broke, is 2. Spain, I can't figure out who's giving money to Spain. Spain is at 1.8. That's what you're dealing with. That's on the 10-year. We bring this up to the 30-year, and if you want to see, you always got to compare apples to apples, meaning for home. Where does it go? Now, in that context, too, check this out. In that context, you as you're transferring that money, the 30-year. The 30-year right now, we're at 2.8. The France is at 1.9. Germany's at 1.5. Spain is at 3.1. A little bit different. It's kind of even, actually. But, you know, I'm not quite sure why that is as even in the 10-year is basically so less expensive. Amazing. King dollar. Let's go to King dollar, because King dollar now is ruling the markets, folks. And specifically what it's all about is this. King dollar came down 435 ticks today. You're at 88.50. You come down with 28,000 contracts. What it looks to me is that you are going to not only come down tomorrow, but there's going to be some real juice on the way down. 88.39 is the low that was generated yesterday. That low had 23,000 contracts. Today, we've done 28,000 contracts. That low looks like it's going to get hit, number one, and what that would do, that'll bring it down to 87 pretty quickly. Each and every time that the dollar was going lower out here today, you had the S&P taking a leg down. Some of the high-volume stocks, and in this case, we are at a higher volume market with the Dow did 900 million out here today. You had GE was off 39 cents. Apple was down 213. J.P. Morgan Chase was off 177. If we go over to J.P. Morgan, you're going to see that J.P. Morgan also came off the high and had big volume. J.P. Morgan had made a high on Monday with 15 million shares. It comes down today with 29 million. The October 15th swing low is $54. That's where J.P. Morgan's going. Whatever equities you own, folks, go look at where the October 15th high-volume swing low is. If we go to ExxonMobil and we take a look at it, that was down 275 today. The ExxonMobil high-volume swing low is at 86.91. You're at 88.67. We did 21 million shares today. That high-volume low is 24 million. Exxon had bounced. You know, Exxon first off went down from 104 in June, down to 86. You did a nice counter-trend bounce up to 97. You're right back down there. The XLE, which, you know, bottom line, the highest weighting structure is ExxonMobil and Chevron. I can give you the rest of them. But the XLE has already broken the October 15th low. So the XLE has just gone from $101 down to 75. That's a big number. And it's not going to stop there, by the way, because if we take a look at this XLE and we put it on weekly first, you're going to see that it's vicious. The amount of volume that's coming in at the XLE looks like it's going to make its way down to 69 on a weekly basis. On a monthly basis, this 63 is the name of the game. So the XLE has a long way to go down. That means the oil service stocks have a long way to go down. I suspect what we're going to see out here next is the XLF. XLF is still really flat. Come down 32 cents today. But guess what? Subtle. It had a monster expansion of volume. We did 51 million shares in the XLF today. That's after making a high of 42 million. XLF also has this high volume spike low at $21.55. Now, what we're going to be having calendar-wise is this. You have the end of the year. We had a sell-off yesterday. It comes all the way back. Each and every time that happens, of course, the bulls not only make more money, they turn around and they get rewarded for it. That didn't happen today, okay? And I suspect the reason it didn't happen is the amount of selling that's going to get generated specifically from what we had happen out here today is going to be pretty intense coming into Thursday and Friday. You got to picture something. If we take a look at the SPY, you got to think like a money manager here for a second. You take a look at the SPY. I'm going to put this back, and we're going to put this on a 3-year weekly basis. I'm going to go back to the beginning of the year. So the beginning of the year, we started at 1849. Now, if you're running money, you have a choice. And what the choice is this. When we came down in October, we came right down that all these folks running money, bottom line, would be flat. Just if they were indexing, they would be flat. Well, now they've got a second chance. What are you going to do? If I've learned anything in the marketplace is this. Most times in the marketplace, you get a second and a third chance, to get out of the market. This is the second chance. I suspect a lot of them are going to take it. The reason being is that we are at December 10th, and you're talking realistically about another 10 at the most. A good 10 trading days left. That's it. That's the end of the year. So what are you going to do? Are you going to hang tight? Do you think the market's going to go up basically 2 or 3%, or do you think it's going to go down 2 or 3%? What does that do? What that does, folks, is that the first people are in selling, get the money, their clients are up. The rest of their clients are either flat or they're going to be down. You stay right there, folks. We're coming right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the diagnostic box spread analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Restoration Hardware, that closed at 86 cents. That is trading at 89 right now. Trading at 90 actually right now. And numbers go like this on Restoration Hardware. The earnings per share was 49 cents. Their estimate was 47, so they basically beat by 2 cents. The revenue estimate was $481 million. They made $484. If we take a look at this equity right now, so you get 86 to 89. Put this on a weekly, and what you're going to have, yeah, this is an ABC up. This is an ABC up anyway. A point on this is 32. Your B is 78. 646. Oh, what a trip. 96 bucks. Yeah, this had broken. This is pretty cool. If you want to see just it's really not a complex ABC up, but it's a nice ABC up. And that's what that's all about, folks. That's the home market. That's what it is. Let's go to Mark at Fort Collins. Hey, Mark, what's going on?
Hey, Tom. How you doing today?
Doing great, man. You having a good day?
Great day, thanks.
Cool, man. USO. This is the oil fund, folks. The low is $20.94. That's today. The high is 39. Okay, so what are we doing with this baby?
Pull it back on a weekly or a monthly to 2009, beginning of 2009.
Okay.
We got within 20 cents of the low of 09, and the volume's light on the weekly and the monthly.
Right.
And the daily, I think. And so my question is what do you think about taking a shot if we test that number?
The 2274?
Yep.
Yeah, no, let it go down there first. Yes. Yeah. So right now, folks, we're at 2328, and 2274 was the low that was generated at 09. Last month, we only did 208 million shares. It's going against 751 million shares, and this month we'll actually do less than that. Yeah. Because what has also happened is this. So check this out. I'm going to go I want to go over the XLE for a second, folks. Because what is happening is that the XLE is also going down. You know, the first leg down had big volume, but it's coming into we're at 75 and, you know, at 63 volume. It's 1.3 billion shares, and last month or the month before that we only did 769 million. So my take on that, Mark, is that it's going to get into it, you know, with light volume, probably reject it. Do you know what I'm saying? And by that time, though, what you will have is that people are going to realize it was a genuine crash, and they won't want to touch them. But at the end of big downdrafts, folks, what you can expect is fast price destruction with low volume. You know, when I was getting out of my car this morning, believe me, I'm saying, oh, I want to crash. There's no doubt about it. There was a crash in 2008, no doubt about it. That's what oil does, you know. And in this case, there'll be a lot more destruction, I think, because, you know, in the United States right now we have all these shale projects going on. So there'll be companies that we hear about. So news-driven, we're going to hear a lot more that's not going to be great. You know, we'll see how they test those lows, but...
Do you like this vehicle, or do you like something else better?
No, that's a decent vehicle. Yeah, it is a decent vehicle. Yeah, it actually moves with the price of it. Yeah.
Thanks.
Cooking, brother. Have a great one, man. Have a safe one. Let's go to Jason in Spokane, Washington. Hey, Jason, what's happening?
No, enjoying the 50-degree day.
50 degrees. That's a beautiful thing, man.
Yeah, it's hot.
So you want to look at UNG, right?
Yes, please.
Okay, so let's go over first. We're going to look at the futures market, folks, because UNG is predicated on the price of natural gas. We'll go over to the futures first. We're trading at $3.73. And, you know, we take a look at this. It had a decent day out here today, no doubt. You know, had some juice underneath it. You're inside 370. Okay, so in that context, it's building cause. We go back to the UNG, because the UNG specifically, folks, it's a limited partnership that trades off the price of the Henry Hub gas, and that's what we looked at in the futures market. So the low of this vehicle is $18.27. The high is $27.89. What I would do, I would wait for a sign of strength before I get on this. You know, it has not had a sign of strength. I'd wait for a sign of strength, and then after the sign of strength, yeah, you could buy a pullback, but I wouldn't be buying this right now.
Okay.
Cooking, brother. Have a great one, man. Have a safe one. We go take a look at Boeing. Let's go take a look at Boeing. Boeing was the largest mover today inside the Dow Industrials, folks, bringing it down. It's down $5. Boeing had volume behind the move, 6.4 million. The Boeing's on its way down to 121. We're at 124.64. The big number that I expect you're going to see in the next few days, folks, is going to be Big Blue, IBM. IBM has been building cars since October 21st to break out these lows. The low that we're talking about is $160.05. We got to $160.03 today. You did it with 4,067,000 shares. If you want to hear something really bizarre, last time it was down, they had 4,068,000 shares. This Big Blue not only wants lower price, it's dramatically lower than it wants. And when this busts apart, this is going to be a nasty deal. Because what you have is this. Every owner of Big Blue from January of 2011 is already in a losing position. At the highs, there was absolutely zero volume. This is a classic case of pure distribution. They kept it at highs from January 31st of 2011 all the way up to September of 2013. It came off the high, broke the swing point with volume, monster volume, by the way. We broke with 146 million shares versus 131 million shares, and what's screaming out here is 116 or 160. So Big Blue is going to be a huge headache for the Dow Industrials. Inside the Dow Industrials today, the headaches for the Dow Industrials went like this. You had Boeing, Exxon, J.P. Morgan Chase, and Caterpillar. Those are the big movers on the way down. We go over to the banking structure. It's J.P. Morgan, came off the high with volume. If she's back inside the lower trading range, you're at 60.68. What that sets up $54. The FTSE. Let's go over the FTSE and the DAX, because what you had out here today is this. The FTSE and the DAX had higher price, and then all of a sudden they just fell apart. And that's, you know, after they came down hard yesterday. The FTSE came down yesterday with 951 million shares, and that's after making a high with 800 million. FTSE is going after the October 15th low also. That low is 62.80. The DAX in Germany really gave it up. The DAX in Germany, when we were open this morning, we're up over $100, ended up being up 6 points. DAX in Germany with screaming, same October 15th swing low. That's 8,600. And right now you're at 97. This big number is coming at you. And what is unusual, no doubt, is coming at you at the end of the year. Guess what? You can put stops in, folks. Don't let the market take back your cash. Just put stops in. That's the end of the world. You know, you think the market's going to go up 5%? What if it goes down 10? We stay right there. We'll come right back.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Not all gold stocks are the same. This offer is valid for current or new subscribers. All the details are on the front page of TFNN.com. The sale will be over before you know it, so act now and lock in this incredible price by visiting the front page of TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per a $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. You had United Technologies down 149. GM was up 84. Big Blue 248. Big Mac 136. Big Mac is going to take 8 items off their menu come 2015. It's not going to make any difference for where the stock wants to go, because what Big Mac is doing, folks, is coming into a B point, a monster B point too, with volume. It looks like your A's at 101, your B, well, it's only $11. That gives you 11. It's 86. Right now we're at 90. Man, it's a nasty. Let's go to Brent in Martinez, California. Hey, Brent, what's happening?
I'm doing great. Tom, how are you today?
Good, man. Thanks for calling. Thanks for holding. Appreciate it.
No problem. I was calling about the Japanese yen.
Okay.
And in particular, what I use, it's the only negative I've found, because I also like to do options, and the open interest is not fantastic, but I've been able to work with it, is the YCS.
Okay.
I have puts on that. I bought it when it was at 91. And I have the February 85s.
Nice. Look at this. Okay, cool.
But I came down with some volume. I'm looking, I think, like, say, the 74 to 78 range down there where I had that gap.
Yeah, man, I think you get some action. So watch this, folks, okay? This is first off, Brent, thanks for calling, man. What happens, folks, is this. So picture this. This is let's go through, look at the YCS. So the YCS, folks, is Exchange Traded Fund. The fund seeks daily investment results that correspond to 200%, the inverse of the daily performance, whether positive or negative. Now, the bottom line is that the yen, okay, has had an extraordinary run, just as the dollar has, meaning as the dollar gets stronger, folks, okay, yen gets weaker, big time, too. Now, this correlation here would be that the dollar is going to pull back. As the dollar pulls back, guess what? What was the symbol again? Y?
YCS.
YCS, that's right. As the yen pulls back, what ends up happening, this is the 200 inverse correlation of that, because as the yen pulls back, it actually gets stronger. This is shorting that leg, and this came down today with monster volume, 1.2 million shares after making a high out there with 551,000. Yeah, I like that trade, man. I think I'm going to take that trade tomorrow morning, too. I like this.
You know, what's funny, Tom, is I bought this on the other side when it was in the 40s.
Yeah.
Way back when you made the call on the yen when it was, down at 75, whatever that level was.
Right.
And rode the thing up, and that was a great call on your part. And,
thank you.
It's the one thing I found that I said the only thing I don't like about it, but we've talked about it before. You just have to be kind of stingy and go in between the bid and the offer, and they'll usually take it. You just have to kind of wait. And,
yes.
Yeah. It's a little trickier than some of them that have better liquidity to them, but you can work with it.
No, you can. And what happens, folks? Okay, so picture this: with these currency trades, they're much longer trades, and at certain points in those trades, folks, it'll be a lot slower. So it goes slow, fast. Slow, fast. Yeah, no, I like that trade, man. You see, and it totally makes sense. So check this out. This is what gets cool, too, is that both Brent and I believe we're not saying that, great, the dollar's going to go to hell in a handbag and the yen is going to get that strong. What it is that the run has been so extraordinary, folks, that you have two different things happening. This can be just a normal correction in a market that the dollar wants to go higher and the yen wants to go lower. Or it could be that, yeah, that was the end of that run, and guess what? For another year, bottom line, yen will get stronger, dollar will get weaker, And the way that the clue that we'll get off of that, I suspect that we're going to get one of them probably within about 10 days. And what it is that it's going to be, how does the dollar index itself come off the highs? Thus far, it's come off the highs with light volume. The way it's trading today, however, though, it's going to come into, some resistance, or some support, rather. If we see that expansion of volume, I mean, today we did 57,000 contracts. If you see more than that tomorrow, then that is giving you a heads up that, okay, the correction could be, I mean, we did 28,000 contracts today. The correction could be much larger, you know, so that's the way I'm going to be looking at it, you know, so. Cooking, brother. Oh, go ahead.
You have a second?
Yes.
You have a second to look at, I just wanted your opinion on gold. I was a little surprised. I know I had a decent move yesterday, and it just seemed like there's a lot of things in place today as far as the currencies and just the overall market, you know, being negative. That
and they didn't move.
I thought it might do something, but it didn't do much.
Yeah, no, so let's take a look at that. Yesterday, folks, what you had is this. We had the wide price spread. You had the accelerated volume. Gold went from $11.99 to $13.39. We did 241,000 contracts. Today, you got to $13.38, so we didn't take it out. You go sideways at 135,000. That's basically telling me that we're building cause here. You know, I absolutely agree with you in the context that the dollar index to folks was down 435 ticks. It's like, okay, why couldn't gold go higher? Bottom line is it didn't necessarily go lower either, you know. So what we do want to see with gold, though, is this, is that I would like to see this stay inside this 1209 area. And where I'm going with the 1209, folks, what I'm doing is I'm taking it, it's like 1209 to 1213 gives it the higher range that would make a run to 1347 possible. So I'm just kind of putting a trend line across how it broke down, because when you know, gold went straight down from 1347, first leg down, took it down to 1184. But when we dove from 1224 to 1184, it rejected that, then went quickly back to 1256. So what I'm doing, I'm basically putting a line across there and say, okay, that's the trading range. We're out of the lower range. We're into the higher one. As long as you stay in that higher range, that's going to be the building cause to get to higher price. You know, and
yeah, it seems like the days that we've had the strength and the wide price spread, it's been on good volume. So I mean, I'm not looking to just, you know, go negative. It just seemed like, in my mind, it should have done a bit more. And I'm, you know, on the bullish side, like I said, it did with less volume. So I think it's all still intact. I was just a little surprised it didn't do more.
Listen, I absolutely agree, number one. But there's nothing wrong with being really nervous, too. Because, no, seriously, right? I mean, because the reality, folks, is this, is that, you know, this downdraft in gold has been dramatic. There's no two ways about it, okay? So when you look at it, and, you know, you look at a few of the equities, they've had the nice signs of strength. You know, they've had the wide price spread. They've done what they're supposed to do. But don't let your guard down. That's my point more than anything. And I'm looking at the same thing. I'm saying to myself, well, this is interesting. I mean, because what I have done is that I've got in the physical market, and I'm happy I did. Do you know what I mean? You know, buying. I like it when I'm nervous. Also, it doesn't mean I'm going to be right. But in the same context, like, okay, man, you know, we'll see how this shakes out. But I do expect, what I do expect, by the way, folks, is this. I expect that you're going to see this move, like, right now. And when I say right now, the next 3 or 4 days, we're going to have another very fast move to the upside. Because it looks to me that the equities, the contract itself, looks like it wants to do an ABC structure on the way up. That's how this is kind of set up, you know. So
yeah, I mean, you definitely need to watch all the currency, you know, all the things that I've learned from you guys, you know, keep it all in context as far as the currencies and just all the different correlations. So
it is, man. It is. It's crucial. And what happens is that you can get hints out of that, you know. I mean, that's why I love that dollar-yen trade, meaning, you know, it's like, hold it, man. That's one of these heads you win, tails you may win, too. And it has the context of the... Is this just going to be a normal pullback, or is it a change of trend? Folks, if you remember, we were talking last week, I was on the headlines of the Wall Street Journal, it had King Dollar. Let me tell you something, okay? King Dollar, I don't think, has been on the headlines of the Wall Street Journal since the 80s, okay? And guess what? That was not the high, okay? But it was the week before the high. You know, King Dollar ended up going to a higher high. I believe that So in King Dollar, the high thus far was 89.56. I think the King Dollar was at 88.73 when that was on it. And that's a good indication. And that is a contrarian indication, folks, but that is what does end up happening on a continual basis on just about all investments. As soon as you read about it, cooking, brother.
All right, thank you very much, Tom.
Okay,
Take
man.
care and have a great holiday if I don't talk to you.
Okay. Hopefully we will talk. I appreciate that, though, man. Have a great one. Have a safe one. You stay right there, folks. We'll be coming right back. Dow Industrials down 268. NASDAQ off 82. S&P's off 29. We're going to be right back.
Platinum, grains, crude oil, gold, copper are just some of the commodities mentioned. In the most recent issue of Andy breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything, and should you decide to continue, you will lock $1 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodity. The front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a late technology. If you had $1,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say You can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar is ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick or tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Don't forget, folks, every trading day we have broadcast 10 hours of live content at TFNN. All that content you get right on your cell phone. TFNN.mobi. If you'd like to get Tiger TV, that gives you the video, audio, all the charts. Just go to TFNN.com on your cell, hit the Tiger TV on the right-hand button, right-hand top. You can get both delivered. Now, as you're over at our website at TFNN, we have a celebration going on. Next Tuesday is my 660th edition of the Gold Report. That's 12 and a half years. You can get 60 editions of the Gold Report for only $600. That's half price. You will also get the Art of Timing the Trade, my book. It's going to be autographed. That's an $88 value. You get that absolutely free. If you happen to be in the metal market, you want to be in the metal market, you're a gold subscriber right now, you have Tiger dollars, all of the above, check it out. You have another 6 days to get that offer, folks. So it's $660 at $600. Let's go to Victor in Stoughton, Mass. Hey, Victor, what's going on?
Not much. Tom, what do you think of Micron? I am in Micron, and after it broke out of 34.93, do you think I should get out, take a small loss?
Yes.
And since you're expecting a big market correction?
Yes. And the reason being, so watch, this is what you have. You're at $34.86.
But wait a minute. I want to make one more point to all your listeners. I made tons of money following your advice on the bond market.
Oh, good.
This is all just gravy.
That's a beautiful thing, man. I mean, that's nice.
Your advice. I took your advice from 3 to 187. I can't thank you enough for that.
Well, listen, I appreciate it, man. Thank you so much. So what you have here inside Micron is this. October 15th is your benchmark. And, folks, this is the benchmark. It's across all indices, you know. And when you have large corrections, all the babies get thrown out. Doesn't matter what baby is in. They all get thrown out, folks. That's just how it goes. The high of that low is $29.73, Victor. So that at least is going to get tested. You know, you're back inside the range, meaning the lower range. No, you're not. It needs one more penny to come back inside the range. It's $34.85 to get in the lower range. But yeah, I would do that. Let me do something. Let me go over to Intel just for a second, because Intel has been one of the strongest ones inside that sector, and Intel's still not bad. Intel's at 36.42 and has to break inside 35.97. Let me just see something. Yeah, but Intel's going to come inside too. Intel, on a monthly basis, took out 26 with much lighter volume. So Intel's going to come in too. And Intel has a high volume low at 29. So Intel also wants to come down there from that October downdraft. The October downdraft, I suspect, is going to take a lot of these equities down. And what you do have is this. This is what you want to wrap your head around also. The large funds, folks, okay, own huge amounts of all these oil stocks. And what you're going to see is that you're going to see an aspect that selling in those oil stocks is going to continue to take place. The reason being is that's where the tax losses are going to come in. Now watch this. That's the tax loss side, and this is a fundamental deal I'm walking you through here for a second, okay? But it's only 3 weeks before the end of trading. So now, if we turn around and we take a look at Micron, it's like, oh, man, hey, if you're going to take some profits, this is, you know, in your fund manager, right? this has been a one-way ride. Micron went from $5 to $34. If we just look at this year alone, we've gone from $20 to $34. So if you're going to take some profits and take some losses, you certainly could take your profits in Micron, right? That you're making money, folks, as a fund. You're making money. That's in this case, you're making 20. You're almost making what, 70%. Then, so you're not going to be paying any taxes. What you're going to be doing, you go over and you're selling ExxonMobil. You're selling one of your large integrated oils. So the fact of the matter is, you smooth it out so you're not paying any taxes, so that your shareholders inside those funds, you know, basically won't be getting hit with taxes twice, once for the fund and then once for the distribution going out. You know, so yeah, I mean, there's nothing wrong with taking a few dollars. You know, another way you can do this, Victor, right, is instead of just flat out selling it, you know, just put a stop in, you know. The problem there would be, of course, if it gaps down, and this gapped. Yeah, you know what? Don't do that, because this is what this did yesterday, too. See, this gap down yesterday. This went from 36.87, and it went straight down to 35. So it gave up, yeah, it gave up $1.87 on the open, but it made it back. But if you look at this, it only made it back to the gap. It didn't make it back. And then at the close today, someone sold a lot of shares, 2 million shares. Let me just see if I can see that trade. 655,000 at the close. Yeah.
So just get out.
Yeah, just get out. Take your money. Take your money. Bring your wife to the Four Seasons. The Four Seasons is perfect in Boston right now, Victor.
Okay. All right. Thank you very much.
Okay, man. Have a great one. Have a safe one. And you know, when we talk bonds, folks, okay, bottom line, this bond market hasn't stopped. That bond market wants lower yield, wants higher price. And this is a supply and demand issue, too, you know, with the bond market, folks. What happens is that large institutions have to own bonds, number one. Every person in every institution that has bought bonds has been rewarded. The Japanese, the Chinese, some of the largest buyer of our bonds, they've been rewarded in an extraordinary way. Extraordinary. You know, the folks that like to sell fear, you know, in the world and in the marketplace in general, we're always talking about no one's going to buy our bonds, the dollar's going to go to hell in a handbag. Well, factually, folks, okay, what has happened is that has been the #1 profitable trade in the United States, flat out, okay? When we take a look at this, you not only get paid and you're going to get your money back in the bond market, but depending on where people have bought into the bond market, the run has been extraordinary. And, you know, when you buy in the bond market, you don't look for extraordinary runs. In this case, that is what has happened, however, because these rates continue to go to lower price. The bonds themselves go higher. That's just a supply and demand issue. The market going down, that's going to be a safety issue. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right here tomorrow. Go get them, folks.